The spring real estate market. Today we're talking about what we think will happen this spring to better prepare you for your next move. Welcome back to the channel. My name is Ben Robitaille, and today I'm joined by Kevin King from Centum Financial Services, King Mortgages. And today we're talking about what we think is going to happen in the spring market, both from a realtor perspective and a mortgage broker perspective. So I've broken down the market into 5 categories. Time on market, the activity or the number of sales, the number of new listings, the type of market we're in, so buyers, sellers are balanced, and the sale price. So first, time on market. So in the real estate world, I mean, knowing how long on average a house in a typical market will last, I mean, is important for both buyers and sellers, because if you're a buyer and you see a house come on the market that you like, you want to have a good idea of how much time do you have to act on it. And I find as a seller, I mean, if you put your house on the market today, is it going to be sold a month from now, 2 months from now, as long as it's priced appropriately and meets all this normal criteria, right, if you will, as a seller.
And lenders actually do look at that as well. A lender, sort of the final step before they're like, here's the money for this place, is if we get this back. And they always have to assume the worst, that might happen.
Yeah.
Otherwise, they wouldn't be making a good decision in lending on it, whether it's a private lender, a B lender, an A lender. They always know if we get this house back, or they need to know how long are we going to own it for. That's important to them. Very important.
Right. Yeah, it makes sense. So, I mean, I always like for stats zoom out as far as possible within reason, because I mean, I find if you dive right into Midland or Penetang or Tiny, like the numbers are just so small that depending on what happened that particular month, like they can skew one way or the other. So I've taken a look at Simcoe County as a whole.
Right.
And since we started seeing the interest rates increase at the beginning of last year, the days on market has kind of steadily gone upwards. And we had a big increase in December and January of this year, with a drop off in February.
Which totally makes sense.
Yeah.
Because there's less buyers, because less affordability.
Yeah. So January of this year, average days on market for all of Simcoe County is 45 days. Mm-hmm. In February, that dropped slightly to 40 days. I'm personally a lot busier, so it feels to me like there's a lot more interest, and that buyer demand is sort of ramping up from purely how many showings I'm doing. So I don't think we're going to see a drastic drop off, because I think buyers are being relatively cautious and still really doing their due diligence before diving in with an offer. But I think throughout the spring market, the number is going to come down very slowly. I don't think we'll see anything in like the 20-day range. I think we might hit 30, mid-30s, high 30s for average days on market. But overall, I think it's trending downwards. I don't know how long it'll last.
I've definitely seen a major uptick as well in purchases. I've been swamped pretty much January, February, and March in terms of just refinances, people trying to consolidate, all that stuff, and then you add purchases into the mix now too. Mm-hmm. And I think, everyone's getting over the rate shock. The ones that can, like, there's always been people that can afford it. There's less of them, of course, but the media did a crazy job terrifying everybody.
Right.
So, and that's eased off essentially. And now, you're hearing more talk of they're going to come down. You're not hearing all of this negative doomsday talk. So that's definitely helped with ease people. And historically, I don't know if we're ever going to see 2% rates again. I'm not sure that's going to happen. Definitely, maybe in our lifetimes. But who knows? I never thought we'd see prime at the prime rate at 7.2 either. That still blows my mind to this day to say it. So ultimately, I don't have a crystal ball. Nobody does. Nobody knows. Yeah. But if you go back 40 years, 5% is a good rate still. Actually, it's a very good rate over the last 40 years. Mm-hmm. So, and people are adjusting to that. People are seeing that. Just where it doesn't fit in the mix right now is the prices have never been this high.
Right.
At 5%.
Right.
So that's the struggle. But people are finding ways around. They're getting mom and dad co-signing. Mm-hmm. They're getting mom and dad giving large gifts. Like, lots of things are happening. So yeah, I don't know. The spring market, like last year, we had a lot of very similar activity in this time of year last year, mm-hmm. and then it kind of died right off. So that potentially could be happening again, like a false spring market.
Right.
Or it's going to go good, like a couple rate drops like they're talking, it just might send things in a frenzy again for sure.
Just to like take a sidestep here, like in regards to rates, I don't know. My take on it is if we do get a rate drop is April the next announcement, and then I'm not sure what's beyond that, but I think the biggest uptick in activity is going to be, in our market anyway, the entry level, between $400,000 and $600,000, which I know doesn't sound entry level, like that's still an expensive house, but
it's entry level now.
It's entry level nowadays.
Yeah.
Right. So I think as soon as those rates drop, the people who've kind of been waiting for the rates to drop are just going to come flocking back to that price point to try and get themselves into the market. I don't know if seeing that rate drop is going to affect kind of the upper end, so like the 700, 800, 900 plus market as much.
And I think too, like like you said, you want to compare, you want to take a bigger look, just because it's the numbers are so small, it's hard to look at. But I think it's important to know what you're buying or what you're selling, in terms of, because they all have different sort of components to them. Like you cannot compare the days on the market to a $600,000 house versus a $2 million house.
Right.
Like you need to know sort of where things are at. And I like to call that 4 to 6 range the sweet spot in our area.
Yeah.
Maybe could even go as far as 4 to 7 potentially. And that's, there's a lot more activity in that. That's where the affordability lies, basically, is what it boils down to. Once you start getting beyond that, you need some big numbers to get a mortgage for that size, and you need a bigger down payment, all of it.
Right.
So
the buyer pool just gets smaller and smaller.
Exactly.
And smaller.
Exactly. Right? The higher up you go, the more it is.
Yeah.
So really, it's the April 10th and June 5th are going to be the important meetings.
And not to put you on the spot or anything, but if you had to guess when the first rate cut's coming, if it's coming.
So everybody seems to say that it's coming. I don't want to sound doom and gloom, and it might come. It definitely probably really, really needs to come. However, inflation is still not where they want it. It was at last meeting, it was at 2.9, I believe, and they want it at 2. So we're nearly we're 50% above almost where they want it. I don't know. I think we will see a cut or two, just to kind of answer your question. Maybe it's going to be a quarter. That's what they're going to cut it.
Yeah.
And then they're going to see, and then maybe we'll get one more. But they're keeping an eye on that. Inflation is the most important thing.
Back to our spring predictions. So the number of sales in relation to the number of listings is how I look at what kind of market we're in. So it's an important factor in what the market is doing, because lots of sales is great, but if there's also lots of listings, then that kind of negates the lots of activity, changes what market you're in, versus few sales versus lots of listings. That's going to have a different impact.
Right.
So in Simcoe County, we actually hit a 3-year low in December of 2023. And I know that sounds dramatic. I mean, when you look at the graph over the last 3 years, it's cyclical. December is always a low month. Yeah. And December 2023 just happened to be the lowest of the last 3 years. I mean, we've seen a steady increase over the last 2 months as we kind of get into the spring market, which is normal. I don't think the number of sales is going to shoot through the roof. A rate cut might change that, but at the risk of not making these bold predictions of the market's going to go crazy, I mean, I think it's just going to be a gradual increase and fairly normal, dare I say, in terms of a spring market in relation to where we've been for the last year.
I would predict, just looking at those numbers, because in the bulk of Simcoe County, I think it's fair to say that we don't have a ton of inventory. Would you say that's correct?
Compared to historical numbers, yes.
Yes. Yeah. Okay. And I'm saying all of it, because there are some areas there's a lot.
Yeah.
But so again, those sweet spot prices, those are probably going to go up a little bit. That's where the traction is. That's where the affordability can happen. So they're going to shoot those up a little bit. But I strongly feel you're going to see the higher end stuff come down. There hasn't been a lot of activity in that anyway, because those people, you're only probably really seeing the people moving that have to, or can't afford it anymore, or got a job change, what have you. People, when they think their house is worth $2 million and now it's worth 1.6, they're going to sit and hope for it to come back to 2 maybe.
Yeah.
So there hasn't been a ton of activity, and it's just simple affordability for those that need to sell. Who's available to buy them? There's not a lot of people. Mm-hmm. So those ones I think are going to correct a little bit more. Now separate waterfront from that, because waterfront is a whole beast on its.
Yeah, completely different market. Right. Okay. Now, looking at the number of new listings in Simcoe County and what will happen in the spring market, I mean, you can see here it's very cyclical, right? We go up, we go down in December. We go up, we go down in December. So, I mean, December we hit a low, not surprising. Our 3-year low was December of 2021, but not by many. I think December of 2021 was 344 new listings. We had 356 in December. Last summer, spring was our lowest of the last 3 years as well for new listings. So yeah, inventory is low, and inventory is starting to shoot back up. I mean, we had 774 in January, we had 811 in February. We're almost done March, but March numbers are coming soon. This is cyclical to me. We might not hit the same peaks that we hit over the last 3 years, but you're going to see more listings come on the market in the next few months. What's going to be interesting to see is how long those listings stick around.
Yeah, I think there's a lot of people that are sort of waiting on the sidelines. They tried to sell their house, wasn't much activity, price was maybe too high, and those people they're hearing this little uptick, and is now the time. So hopefully we don't end up with that there's way too many of those people list. Like that could turn bad.
Yeah.
Hopefully it's sort of a fair balance, but I do believe there's a lot of people sort of sitting on the sidelines that are, kind of looking to make a move or downsize, upsize, whatever the case is. It's just the timing hasn't been right.
Yeah, fair enough.
And another thing to point out would be, we're starting to get the rates really started dropping in 2020. So, we're just getting into that right now, right? So these people, it's like they're comfy in that mortgage, and maybe they can't port it if they're going to do whatever it is, but and those, we're going to see those exiting now. Like really next year is the start of when it really all is going to unfold. You know what I mean?
Right.
So, and then we got another 2 or 3 years of that, like 2024, 2025, and then a little bit into 2026, there's going to be a lot of people having rate shock come about them if these rates don't change.
Do you think the risk of power of sales going like way up is high come that time, or do you think it's, for the most part, the banks are going to try and work with the seller to make something work?
No, the power of sales are dangerously getting higher.
Okay.
Like a lot. I've been tracking those closely since not this November, last November. Okay. And there's well over 500 in the province right now, for sure, listed on MLS alone. And they're not all, you can only see them on MLS if it's in the public remarks. There's about 124 right now. And that number, like when I started looking last November, was 30.
Okay.
So they're definitely up.
That's a pretty big increase.
I actually dive in and look at a lot of these a little bit and see like who the lender was and that kind of thing. And it's definitely more the higher, like I haven't seen a lot of bank power sales.
Right.
Like I'm not diving into every single one.
Yeah.
But I haven't seen a ton of bank power sales. They're more private and B lenders. I just wanted to talk a little bit more about power sale and you mentioning that because it's a topic that a lot of people don't understand. First of all, there hasn't been a power that we've just started seeing power sales around here. I don't know if I've seen one in the last 5 years prior to them coming around. So a lot of people don't realize that buying a power sale is just not like walking into the bank and getting a power sale and put 5% down. Like that's not usually how it goes. I don't want to say that it cannot happen that way, because it can. The lender's going to want to see an appraisal. They're going to want to see a home inspection, and the house is going to have to look pretty good, and you're going to have to be a pretty good lender, like to get CMHC involved on it. So meaning a minimum down payment, that's going to be pretty tough. But I have in the past 10 years ago, I have seen it done.
Next, for the spring market, I want to talk about what kind of market I think we're going to go into. So when I look at market personally, I look at what's called month supply. So this is the number of listings that are available divided by the number of sales. So basically, if you have 3 months supply, it would take 3 months at this number of sales to deplete how many listings there are. And as kind of a rule, I say between 0 and 3 months is a seller's market. Between 3 and 6 months is pretty balanced, and anything above 6, you're into a buyer's market. And obviously, the further you are in either direction, the more you're into that market. And like looking historically, I mean, for Simcoe County between 2021 and 2022, up until June of 2022, we were well under 3 months of inventory. For a lot of 2021, we were under 1 month of inventory. So if you were putting your house on the market, average house was selling within that month. Now, if we go back to March of 2023, we actually just started going above the 3 months of inventory for Simcoe County at that point. And we reached a high in October of 2023 of 4.4 months of inventory. Now we're still above 3. We're at 3.1 in January, 3.2 in February. I think it's going to hover around that 3 mark. I don't think we're going to be quite into full-blown seller's market, although we are leaning that way. Barring a ton of new listings coming on the market, I don't think we're going to see a buyer's market anytime soon. But for the spring, I don't think we're going full-blown sellers again like we were in 2021, but I think we're definitely going to stay seller leaning for the spring and into the summer. Fall, I'm not so sure. We'll see what happens with rates and everything. But yeah, I think we're going to sit around that 3 months of inventory for the rest of the spring.
That's good. I don't like back when we're in, no conditions. What I did like, I didn't have pressure.
Yeah.
We're getting this done or else you're in trouble.
Yeah.
And that's that. When the pressure's on, you got to have the 5 days and blah, blah, blah. Like, but it just, for safety reasons for the buyers, and just a lot of people got in over their head with that no condition stuff.
Yeah,
that's not safe.
Almost, it blows my mind that like a financing condition isn't mandatory. I feel like it protects both sellers and buyers.
It does.
Right?
It does. And I've had an argument with a lot of agents, and even now, like there's some areas where they're kind of trying to push it a little bit again, and I'm like, I don't think we need to do that. Like, really, it's that hot up there? Mm-hmm. And in Toronto, it's starting to happen a little bit again right now for sure. Mm-hmm. And it, like, your house isn't sold if the person doesn't get the money, and it just causes a big mess.
Yeah.
So you're right. Like, and unless you have, lots of times, cash buyer. There's not that many cash buyers out there.
No.
There's usually some sort of a mortgage going on, and over the years, I've seen houses that are flagged. Like, you cannot get a mortgage on this house for this reason. Maybe not with every lender, but with certain lenders. Mm-hmm. And that's a whole nother sort of argument. Like, usually the seller would know that. Yeah. But the things can happen. So yeah, if you need some sort of financing, there should be a condition in there, and it's just a sort of a comfort level for everybody, like you said. But it's not, unfortunately, it's not mandatory. And a lot of times when you get told, go ahead, like, I've had some of my agents, well, how are these other brokers telling them to just go firm? I'm like, because they're not doing a good job. Like, if in the end, and I know a number of brokers up on lawsuits right now, mm-hmm. that their agent told someone to go in firm, and like, if you put that in writing and they do it and it's not clear, you can be on the hook. So mm-hmm. it's just, it doesn't make sense to do it. And when we had to do it, it was like all these big talks, and it just stress, right? Like, yeah, put it in there, leave it in there, especially right now when you can. It is safer for everybody. All
right, and so the last category I wanted to look at for the spring market was the average sale price. So, I mean, this graph here, you can see in 2022 in Simcoe County, we hit a peak average sale price of just over $1 million, which we are nowhere near. Thankfully. Looking at the last 3 months, I mean, December, we were 727 for Simcoe, 728 in January. We jumped up to 751 for February.
So that's, sorry, when was that? In February 2022?
February of 2022 was that $1 million.
Okay, and then this is just overall, all of Simcoe County.
All of Simcoe County, all property types, everything.
Mm-hmm. Right? And that's what, a 27% drop?
Yeah, about that.
Yeah, that's crazy.
Yeah. So I think, especially if rates come down, I think because that we've been calling like the golden spot between 400 and 600,000, I think those prices are going to creep upwards a little bit. Mm-hmm. So I think it's gonna, I'm not going to say go full blown increase in the average sales price, but I think we're going to start leaning upwards.
How many, does it tell you how many sales there was?
So in the February of 2022, there was 657. So that's our take on the spring market. If you disagree with any of it, let us know in the comments, because I'm happy to be wrong. I don't know.
Yeah.
I don't know about you.
Or if you have an opinion.
Yeah, let us have it. That's all for this week. If you have questions about the real estate market and want to chat, or you want a free home evaluation or anything to do with real estate, I've got a link in the description. You can book a call directly with me. I will also link to Kevin's website so you can reach out to him if you have any questions about mortgages. Hope you're doing well, and we'll see you in the next one.